Okay, let's talk about the stock market. For so many of us, it feels like this other world, right? Full of confusing jargon and numbers flashing on a screen, a place that seems like it's only for Wall Street experts in fancy suits.
Is that actually true? Is it some exclusive club with a secret handshake? Honestly, no. It's way more accessible than you've been led to believe. So if you've ever felt like you're on the outside looking in, stick around. You're in exactly the right place.
We're going to change that feeling, starting right now. Think of it like this. Together, we're going to build your investment foundation, brick by solid brick. In just the next few minutes, you're going to have the blueprint you need to take that first step and to do it with confidence.
So here's our game plan. We'll start with a quick tour of the market itself. Then we'll get into the nuts and bolts, the actual mechanics. After that, we'll draft a simple investment plan. And we'll wrap up with how to play it safe and smart for the long run. Sound good? Let's dive in.
All right, first things first. You can't start building a house without checking out the land, right? So let's get a feel for the landscape. At its absolute core, the stock market is just a marketplace. Seriously. But instead of fruits and vegetables, people are buying and selling shares. And a share is just a tiny, tiny piece of ownership in a company. For the company, it's a way to get cash to grow and innovate. And for you, it's a chance to own a piece of that potential success.
Now, here's a key distinction you gotta know. There's the primary market. That's when a company goes public in an IPO and sells brand new shares for the very first time. But all that action you hear about on the news every day, that's the secondary market. That's where investors like you and me trade those already existing shares with each other. So what can you actually buy? Well, you could buy a stock, which means you own a piece of a single company. But for most beginners, the real game changers are exchange-traded funds. We call them ETFs and index funds. Just think of them as pre-made baskets holding lots of different stocks. They give you instant diversification, which is just a fancy way of saying you're not putting all your eggs in one basket. It's a super smart way to start.
Okay, we've surveyed the landscape. Now it's time to get our tools ready. This next part is all about the practical, hands-on mechanics of how you actually get started.
Your number one most essential tool is a brokerage account. It's just the account you'll use to buy and sell all your investments. When you're picking one, you'll want to look for a few things. Low fees, of course. Access to fractional shares is a big one. That lets you buy just a small slice of an expensive stock. And, if you can, find one with access to global markets.
Once you've got your account, you have to place an order to buy something. A market order basically says, hey, buy this for me right now, whatever the price is. But a limit order gives you way more control. It says, hey, I only want to buy this if the price hits the number I've set. For a beginner, using limit orders is a really smart move to make sure you don't accidentally overpay.
You're also going to see a term called the bid-ask spread. Don't let the jargon scare you off. It's actually really simple. It's just the tiny gap between what buyers are willing to pay and what sellers are willing to accept. Think of it like a tiny fee for the transaction. All you really need to remember is this: a smaller spread is always better for you. Okay, we know the landscape. We have our tools. Now for the most important part of the whole project, the blueprint. Because having a plan is what turns this from random gambling into disciplined investing. And here it is, a simple 4-step blueprint. Step 1, figure out your budget. And this is critical. Only invest money you are sure you won't need for several years. Step 2, diversify. Spread your money across different countries and industries. Step 3, start simple. Remember those ETFs and index funds? They're your best friends here. And step 4, be consistent. Invest a set amount of money on a regular schedule. It's a strategy called dollar cost averaging, and it's great because it helps take the emotion out of it.
So, what might this actually look like? Well, here's a sample. You'll see most of it is in a global index ETF for that broad diversification we talked about. Then there are some bonds to add a bit of stability, a smaller slice in emerging markets for some growth potential, and you'll notice a little bit of cash, always ready for the next opportunity. It's a balanced, straightforward starting point.
Now, I have to be absolutely crystal clear about this. This explainer, and especially that sample portfolio, this is all for educational purposes. It is not financial advice. Your own personal situation is unique, so please always do your own homework or talk to a professional.
All right, our final section, let's talk about staying safe and smart. Because just like building a house, you need safety rules, and you need to do a little maintenance to make sure everything stays strong and secure over time.
You know, a huge part of being successful long-term is just knowing what not to do. So first up, please don't chase hot tips you see on social media. Second, try to keep your emotions out of it. That means no buying just because you have FOMO, fear of missing out, and definitely no panic selling when the market gets a little shaky. And finally, as a beginner, just stay away from leverage. That's trading with borrowed money, and it just cranks up the risk way too high.
Being smart also means knowing about the real-world costs. You'll see small fees from your broker, and the funds you own will have management fees. And of course, when you make a profit or get paid dividends, you'll probably owe some taxes. The rules are different everywhere, so it's always smart to look up how it works where you live.
And maybe the most important rule of all is to never, ever stop learning. This explainer, it's your foundation, your starting point. But the job isn't done. Keep up with reliable financial news. Maybe even start to learn the basics of how the pros analyze companies and markets. In the end, your own knowledge is your single most powerful tool.
So there you have it. The stock market isn't some secret club after all. It's a landscape with tools, rules, and blueprints that are available to anyone who's willing to learn them. We've walked through the whole plan, from what a share even is, all the way to a sample portfolio. The foundation is officially laid. So the only question left is, now that you have the blueprint, what are you going to build?